Hello. Today is Saturday, June 13th, 2026. Here is your daily signal. According to Fortune, Gulf states are rapidly increasing their investments in artificial intelligence, while American policymakers from across the political spectrum, including Donald Trump and progressive Democrats, are considering public equity stakes in AI companies. Public and regulatory ownership initiatives in AI have gained momentum as governments seek more strategic involvement, with equity stakes and sovereign investment funds viewed as key tools to guide and benefit from industry growth. Recent years have seen major economies announce ambitious funds and policies, such as Norway's Sovereign Wealth Fund and Singapore's Temasek Holdings, designed to secure national interests. This week, the European Commission proposed a €5 billion public-private fund to take equity positions in high-risk AI startups. The UK launched a review over partial public ownership of government-funded AI models, and U.S. Commerce Secretary Gina Raimondo stated that sovereign equity investments in AI infrastructure are under consideration. Near-term, direct equity stakes by public entities may push commercial AI development closer to regulatory and societal goals, heightened antitrust scrutiny, and more robust safety and transparency standards. Medium-term, sovereign investment strategies from the U.S., EU, and China could fuel global competition for AI leadership, and increased public oversight is likely to foster stricter ethical deployments across advanced systems. Next, let's turn to how energy grid modernization is reshaping the landscape for AI development. Fortune reports that the United States faces mounting concerns over its electricity grid, while China is forging ahead with infrastructure upgrades in the race to support the AI boom. China and the U.S. are accelerating investment in grid modernization, essential for powering energy-intensive AI data centers, with the U.S. focused on smart grid technologies and China expanding ultra-high voltage UHV lines. The AI boom has dramatically increased power requirements, and the U.S. Department of Energy has projected data center consumption to hit 35 GW by 2030, driving both countries to secure supply chains and advance global standards. This week, the Department of Energy announced $3.5 billion in new grants for grid upgrades, set for deployment in early 2027. Meanwhile, China's State Grid Corporation completed a UHV line linking Guizhou and Guangdong, delivering 8 GW of capacity for AI and cloud computing. Google also revealed a $1.2 billion partnership with Siemens to build smart grid platforms at U.S. hyperscale data centers. Near-term, rapid grid modernization efforts are expected to ease infrastructure bottlenecks, supporting more advanced AI models, but competition over technology standards and supply chains could deepen U.S.-China rivalry. Medium-term, successful grid innovation may create export opportunities and boost innovation rates. However, escalating energy demands are also raising concerns about environmental sustainability and sparking regulatory interventions. Next, onto venture capital, where fresh strategies are reshaping startup investment. As TechCrunch highlights, Justin Earnest has invested nearly $400 million into hot startups, including Anthropic, Anduril, and SpaceX, by leveraging a captive network of limited partners LPs instead of a traditional venture fund. Captive LP networks involve LPs closely tied to a venture capital firm, offering proprietary deal flow and strategic support, an approach increasingly adopted to enhance funding stability and gain exclusive market insights. The rise of captive LP structures, first accelerating in 2022, reflects a wider trend as funds seek new ways to differentiate themselves amid fierce competition. Key stakeholders in this space include institutional investors such as pension funds and large corporations like SoftBank Group and BlackRock, as well as venture capital giants like Sequoia Capital and Andreessen Horowitz. Regulatory bodies such as the U.S. Securities and Exchange Commission oversee fund structure and LP disclosures. In the near term, captive LP networks enable greater deal exclusivity and efficiency in capital deployment, while medium-term, they could provide stronger portfolio support but may reduce funding diversity and attract heightened scrutiny from regulators. Enhanced data sharing within these networks may accelerate innovation cycles, but as adoption grows, new compliance standards are almost certain to follow. Now, onto the markets. European equities rose, with Spain's EWP up over 6% and Netherlands showing strong momentum. EWP is a standout top gainer among major indices. Italy's EWI advanced by over 2% as buyers returned. while Germany's EWG edged higher and France's EWQ saw modest gains, both led by steady sector recovery. UK's EWU moved up over 0.5% as investors favored stability among developed markets. Chile, India, Taiwan, and Belgium posted gains, Taiwan's EWT notably up more than 8%. Japan's EWJ and Hong Kong's EWH moved higher on the day, although Hong Kong led month-on-month. China large-cap stocks, represented by FXI, rebounded on the day but remain weak on a monthly basis. Indonesia's IDX outperformed with a nearly 3% daily climb, though still negative for the month. Commodities were mixed as gold's GLD rose fractionally but monthly losses continued, while silver's SLV jumped 0.7% on the day but dropped sharply for the month. U.S. oil fell over 2% and platinum PPLT dropped by over 0.5%, with agricultural DBA and carbon KRBN also slightly lower. Copper CPR was a daily leader, gaining over 1.5%. Among favorites, AMD surged 4.7% daily and 15% monthly. ARM soared 11% and 72% this month, while Intel Inc. popped 6.5% today. EBEF fell around 7% and Amazon declined more than 1% daily. The S&P 500 climbed 0.5%, Finance XLF gained nearly 1.4%, and semiconductors stocks led sector moves higher with a 1.6% jump. That's it for today. You can find more news and details on our website. Goodbye.